Hi, I'm Andrea Sheridan with Keller Williams Real Estate, and I'm here with Darren Copeland with Leader One Financial. And we just have a few questions to ask.
Yep, fire away.
All right. Well, what does a potential buyer need to do to start the loan process?
Sure. It's actually pretty simple. And the great thing, if someone's thinking about buying a house, getting pre-approved is the first thing that you want to do before actually going out there and finding your dream house and maybe finding out you can't exactly qualify for that. So what they do is they can either go to our link or call us, go through the application process. That takes about 5 minutes. And then what we do, Andrea, is we tell them exactly what docs they need, like recent pay stubs, W-2s, tax returns, that type of information that we need in order to finalize their approval for them.
Wonderful. So how will they know how much house they can afford?
Well, there's this thing out there, it's called your debt to income ratios, and your DTI basically measures how much money you have coming in each month versus how much you have going out. So what all banks do, and the underwriters and myself being the loan officer, is we take the income, look at how much expenses, whether there's car payments, student loans, credit cards, things of that nature, and we just put that into the computer, see what their debt to income ratio is, and then the computer spits out about how much what their maximum purchase price is in order for them to go out to find a house. And once we know what their maximum purchase price is, one of my favorite sayings is, just because you can doesn't mean you should, because we want to, we want them to keep the house and be comfortable, and then we work with them on that as far as if they spend X amount of money each month, then that's how much their monthly payment's going to be.
Great. So they'll have an idea of what that monthly outlay looks like for both mortgage payment, maybe an estimate of what utilities would be, so they know that it's comfortable and they're not going to be house poor and eating macaroni every day.
Yeah, exactly. Because our big thing is we don't want people eating peanut butter and jelly on the weekends or ramen noodles. And our big thing is we want to set them up for success. Yeah. And, our business is kind of based on referrals. So we want our customers to be really happy. So we're really conservative with the numbers. So most of the time they come in a little bit lower than what they expect, because again, we don't want people to be living on the edge, spending more money than what they really should. But we want them to have a great house, but also still enjoy their life at the same time.
Great. Well, I have a lot of buyers who ask me, how long do I need to wait after I've had a bankruptcy or a short sale or a foreclosure? Tell me a little bit about that.
Exactly. Well, the general rule of thumb is if someone has something like that, and bad stuff happens to us all, generally the rule is 3 years. So if you've had a Chapter 7, a foreclosure, short sale, the rule of thumb is you have a 3-year waiting period, and then after that, you're ready to go. Now, the one exception is on that if they've had a Chapter 7 and they did not include a house in the bankruptcy, then their waiting period is only 2 years.
Okay, great. How will they know, as a buyer, how much money approximately they need to save up to be ready for closing?
Sure, exactly. So when they go through the approval process, we ask for their bank statements or 401ks and all that fun stuff. So we have this questionnaire that we run through with them, and then that way we let them know on closing, exactly how much they're going to need for closing within a few dollars. And then also, we want them to have at least 1 or 2 months of reserves. Again, if someone has $10,000 in savings, we don't want to spend that whole $10,000 because, if something comes up with a house, if the water heater goes out or if something comes up, and a lot of people, when they move, they want to buy new furniture and, we don't want to spend all of their liquid assets. So we're very mindful of looking at what's available and putting them, in a position to succeed, so they're not freaking out about how much money they need at close.
Right. Speaking of buying furniture, when should they do that?
After closing.
Why is that?
Because, so this is a great point, Andrea. So the thing is, as you're going through the loan process, you don't want to have any more credit inquiries and you don't want to have any new accounts opened up. So don't have anyone pull your credit. Don't even go get a new cell phone. Okay. So hold off on buying new furniture. I know those 0% ads look awesome, but again, hold off until after closing, because buying furniture, buying a new car, doing anything like that will affect your debt to income ratios, because 24 to 48 hours before your loan docs go to the title company, they won't repull a credit report with your score on it, but what they'll do is they'll do a credit refresh to see if there's any new accounts on there, and if there are new accounts, that can affect your ratios, and then that could be a really major problem.
So if they buy a car, they might be living in that instead of their house?
Yes, they could be living in a van down by the river.
That would be bad.
No, that'd be bad.
So what would you say is the most challenging part of the process in getting a loan to purchase a house?
Really, the challenge for us is just getting the documents we need from the borrower, which really isn't that bad. But if someone is fairly organized, usually, if they're a couple, one person's usually more organized than the other. But as long as they can, get their pay stubs, their W-2s, and their tax returns, it's really not that hard. Like I tell people, is once we approve them online, it's just a matter of filling in the funnel with that pesky paperwork.
Yeah.
And, once they have that, as long as they're cooperative on that, the process is actually pretty easy. Yeah.
Great. Very good. With the closing costs, will you kind of go over what do the closing costs cover? What does it include?
Exactly. So what I tell people is the closing cost is not to fund Darren Copeland's 401k account. Okay, I know. But if they're working with a rock star agent like Andrea Sheridan, the sellers a lot of times will pick up their closing costs. So those closing costs cover several things. One, we have the bank underwriting and processing fee. But then the major part of it is title fees, appraisal, and then about half the closing costs is the startup of their escrow account. So your escrow account is your taxes, your insurance, because on all purchases, they collect 1 full year of homeowner's insurance up front. And then they pad your escrow account with a little bit more insurance and a few months of taxes as well. So heaven forbid, if someone ever missed a house payment, there's enough money in the escrow account to cover those taxes and insurance. So again, with the closing costs, title, bank fee, appraisal, along with the start of the escrow account, then that lump sum can be covered by the sellers. Or if they're in a situation where they can cover it their own, they're more than welcome to do so.
Great. Yeah. Can you just briefly go over the difference between an FHA loan and a conventional loan and how much money they would need to put down for either of those?
Really when it comes down to people qualifying, it all comes down to their credit score. Okay. So their credit score really is the determining factor of what path we go down. And then also depending if they've had a bankruptcy or a foreclosure. FHA is a lot more lenient on the underwriting guidelines. So lower scores, they can handle higher debt to income ratios. So FHA could be a route for those types of folks. Plus FHA is only 3.5% down. Now on the conventional, now we can do conventional with 3% down, which is very cool. But again, a little bit stricter guidelines. The 3% down requires higher credit scores, and they're a lot more strict on the debt to income ratios and how much you qualify for. And then, of course, there's some other programs out there, USDA financing, which is 100% financing for those areas that are kind of on the outskirts of the metropolitan area. They're not heavy.
More rural area.
Exactly, more the rural. It's a great, fantastic program. And then also those who have served our country who have their DD-214s or their certificate of eligibility, they can go the VA route and get 100% financing on the VA route. So we really just ask some really in-depth questions, and then we usually, within a few minutes, we know which way to go with them.
Great. Yeah. What would be the benefit for a borrower who has some cash reserves to put 20% down?
Well, one of the biggest benefits is avoiding the PMI. So if someone doesn't put down 20%, usually they have that extra monthly payment, which is called PMI, premium mortgage insurance. So if they have that 20% down and they're able to do it, now again, the majority of the people, first-time home buyers, a lot of them don't have 20%, which is fine. But if people are selling their house or they get a gift from family members and they're just rolling that money into the new purchase, they can put 20% down, avoid the PMI, and then all they have to worry about in their payment is the principal, interest, taxes, and insurance.
Wonderful. Yeah. So what will a borrower do to start the process with you?
It's actually really easy. We're pretty high tech around here. So they can give us a call here at the office, or they can go directly to our website, and there's a link on there. It takes about 5 minutes that we drive people there, and they take a few minutes, fill out all their basic information, and then once they click submit, it goes right to us, and it only takes 24 hours usually at the most, usually quicker. Yeah. that we can get someone approved. So, within 24 hours, easy. And if it's a rush deal, we can do that all day long.
That's great.
Yeah.
Well, feel free to contact me or go to my website at www.andreasheridan.com to find more contact information for Darren. Thank you so much for joining us today.
Thank you.